What's up, guys? Hope you guys are doing well. Hope you guys had a good 3-day weekend. Today, I did end up taking a win. It was about $820 across my two funded accounts on Apex. And despite it being a win, I'm not actually proud of this trade because in the moment, like it looked good, and I was like, okay, this looks like a good trade. But like after the trade was done and like reflecting on it, I don't think I should have taken this trade. I'll walk you guys through why I thought so. So going into the day, I was thinking that the price action might be a little worse because it's the day right after a bank holiday, and ICT does say to be careful or just not trade on a day after a bank holiday, right? And in terms of my bias, I was I kind of have like a loose bearish bias, and the reason for that is on the 4 hour we were, I guess, kind of in this buy model. We had a order block, inverse fair value gap, displays higher, market structure shift. We opened up this 4 hour gap, tapped back into it, and we were moving up. And I was thinking, we could go to these highs. But then on the 1 hour, this is how it looked. Or actually, sorry, on the 30 minute, when I zoomed in a bit, I noticed that we were almost in, or we were in kind of a sell model, right? So we had the CISD here, inverse fair value gap, and we had left London and Asia lows below us. Oh, sorry, I'm looking at the wrong thing. It was right here. Yes, this 30-minute CISD, and then this market structure shift, and this gap open up. Sorry, that was the other day. That was my bad. But yeah, so we had London lows below, Asia lows below, and we hadn't retraced yet to 50% of the range. Obviously, it looks like we did because I'm not in replay mode, but that's essentially how it looked pre-market. It looked like that, right? So I was like, okay, we haven't rebounced to 50% yet, and we left previous session lows below us, so I could see us actually dumping to those lows before continuing higher, which you can see actually happened, right? So I was either going to take a short down to 50% or wait for 50% to be hit, as well as London Asia lows, and then take a long. But I actually didn't end up doing any of those. I took a short somewhere up here, right? Which I don't think, again, like I was saying, was the smartest thing to do, and I'm not really proud of it. And I'll walk you guys through why. So yeah, I'll walk you through actually a short that did work. It was this 2 minute long here. So this 2 minute long triggered right after sweeping London lows, and then 50% was also tapped, right? And I actually didn't take this. The reason for it was I was actually anticipating that we were going to sweep Asia. Obviously, we didn't, and I was kind of attached to that, so that's why I didn't take that. As well as I don't like taking inverses that happen like right after we expand, like the first inverse after we expand. I'd rather wait for some type of accumulation and then internal manipulation and then take an inverse. To me, like after backtesting it, these are way high probability if you wait for some form of accumulation manipulation and then you take the inverse anticipating distribution. Whereas this inverse, there wasn't, you could kind of argue that like this order block was, I guess, accumulation, but it just wasn't that obvious to me. So that's why I faded it. And at the same time, there was this 5 minute gap. Obviously, it didn't end up closing above, but when that 2 minute closed, the 5 minute gap was still holding. So I didn't know if we were going to reject that, as well as if I took this 5 minute, if I waited for the 5 minute to close to take a long, I would still be long into another 5 minute gap. So I just didn't really think it looked that good of a trade to take. So that's why I ended up fading it. Obviously, it ended up working out. I mean, it is what it is. I have the data and forward testing and back testing to know that when I take a trade like this, it is lower probability. Funny I say that because I did end up taking a low probability trade that I got lucky on. But yeah, so after that expansion, you can see here that we did chop around a bit, and I'm trying to figure out where I took this short. Okay, yeah, so I took this short around 10:50. So I waited for the macro time because I was like, okay, if we're gonna chop around, that might mean that we're just engineering liquidity for the macro until we go for the next move. And at this time, we already swept all these highs, and then price was inside of this BPR here. This is an hourly BPR, and we had swept all this buy side without even retracing to 50% of this new range that we made on the 15 minute. So I was thinking, okay, if I see something in price that tells me that we want to retrace in terms of like, bearish order flow and an inverse fair value gap, I would take it and I would target this unfilled gap and maybe leave a runner to the 50%, right? So what ends up happening is macro time. I think I took this right before the macro. So at the macro, you see here, I took this right before the macro. It was this 30-second inverse. I waited for a bit of a retrace here, and I tapped in here, and I had a really tight stop. It was a 10-point stop, basically. Or I got filled at 7.5, 7.5, 7.5. So I got filled right here, and I had a 14-point stop, and my first scale was going to be 1.2R, and then I was going to leave a runner down to this unfilled 15-minute. And the reason why I didn't want to leave a runner to the 50%, I was like, okay, I don't think that's too probable. I think we might just tap into this and continue higher. So that's why I had those two targets. You can see the first one did end up being taken, and then I got edged kind of on the second target, and then I went back to break even. So I finished off with like 0.9R. And if you guys know dodgy strategy too, you would know that if you take an inverse and there's a close above, that means you should manually close out the trade. The reason I didn't do this is because the stop was so tight to where I was like, okay, it's 14-point stop. If I stop out the trade right now, that's 9 points in drawdown. I wanted to give the trade more room to breathe, and I was like, I really don't think that price would really come back to this high if we're truly bearish, but I can see us kind of like messing around here and then dumping because of price action being so bad. So that's why I didn't actually close out the trade, and it actually ran to my TP. So I think I just got really lucky on this trade, to be honest, because just look at this price action. It's so bad. And in my head, I was like, okay, I know price action. This is how I essentially rationalize it. I was like, I know price action is really bad right now, but I could I could wait for it to clear up in terms of like volume picking up, and I'll take a trade once volume picks up. And obviously, this when this happened, I was like, oh yeah, of course, volume's picking up right now. We're gonna just dump. And we did lollygag and then we did dump, which I guess that was kind of true. But at the same time, like this price action was so bad, I don't think I have the market experience really to even tell when price action's getting better. So I don't really think I should have taken this, to be honest. I think I just got lucky. And I'll be completely honest with you guys. I feel like this probably would have failed if I keep taking trades like this. It's probably gonna have like a negative win rate, and I won't be profitable, right, in the long run. So, and that's just me. Like the reason why I took this trade, I think it's just due to impatience. The 3-day weekend happened, and I was like, and last week was like an okay week for me, so I felt like I missed out on like a lot of profit from last week, and that's just me coming from a place of greed, rather coming from a place of just observing the market and reacting to it. In this case, if I had just observed and reacted, I would have known to just reacted to the bad price action and stepped away, right? And that's one thing that I want to focus on more is just building better habits around things rather than focusing on the P&L, which I think I'm doing better at because even though I ended off the day green, I feel like I feel like a bit like I don't know what else to say like other than like dirty because I did end up taking this trade in choppier conditions, right? So from now on, I'm definitely gonna just work on stepping away after I see something. Like the next time I see this happen, I'll wait for the macro and like if we do start opening up like a bunch of 1 minute gaps, then I'll consider taking a trade. Cause I think I just got lucky here, like to be honest. Like this price action is so bad. I just need to I think I need to just get more market experience to understand when to walk away. Because I see times where like price gets really choppy and then it speeds up and it gets choppy and it just chops for the rest of the day like it is doing here. Like you see this slow stair step up, right? So yeah, from now on, like I think the main focus for me is just gonna be identifying low probability conditions and knowing when to stop away. I just want to focus on that because I feel like I think I have everything else kind of down packed, right? And this is basically my lowest hanging fruit, like my lowest tier skill set, if you will. So yeah, that's what I'm gonna be focusing on today. Hopefully you guys could take something away from this video, and I will see you guys in the next one.